When people hear real estate investing, they usually think you need a huge down payment, a mortgage, and the stress of being a landlord. But here's the truth. You can invest in real estate without ever buying a house, fixing a toilet, or dealing with tenants. In this video, I'll show you smart, proven ways to invest in real estate without owning physical property, who each option is best for, and how to get started, even with limited money. Let's dive in. Option 1. REITs, Real Estate Investment Trusts. The easiest way to invest in real estate without buying property is through REITs. REITs are companies that own income-producing real estate like apartments, office buildings, shopping centers, warehouses, and data centers. You invest by buying shares, just like stocks. Why REITs are great: low barrier to entry, high liquidity, buy and sell easily. Many pay regular dividends. How to get started: buy REITs through a brokerage account. Look for diversified REIT ETFs if you're a beginner. Pro tip: focus on REITs with strong cash flow and long-term demand sectors like industrial, healthcare, or residential. Option 2. Real estate crowdfunding. Real estate crowdfunding lets you invest small amounts of money into large real estate projects alongside other investors. Instead of buying an entire building, you own a piece of it. Popular investment types include apartment complexes, commercial buildings, plus development projects. Why this works: lower minimums than buying property. Passive income. Access to deals normally reserved for wealthy investors. Things to watch out for: less liquidity, your money may be locked in for years. Platform fees. Tip: start with platforms that offer diversified funds instead of single deals. Option 3. Real estate ETFs and mutual funds. If you want maximum diversification with minimal effort, real estate ETFs and mutual funds are a solid choice. These funds invest in multiple REITs. Real estate companies. Property-related assets. Benefits: instant diversification. Low management effort. Easy to buy through retirement accounts. Best for long-term investors, retirement portfolios, plus hands-off investing. Tip: watch expense ratios. Lower fees mean more money stays invested. Option 4. Real estate notes and debt investing. You don't have to own property to profit from real estate. You can own the debt. With real estate debt investing, you earn interest by lending money to property owners or developers. Examples include mortgage notes, private lending, real estate debt funds. Why people like this: predictable income, lower volatility than equity investments, shorter time horizons. Risk reminder: always understand who you're lending to and what collateral backs the loan. Option 5. Real estate syndications. Syndications allow you to invest passively in large real estate deals, while professionals handle everything. You're essentially a silent partner. What you get: passive income, professional management, exposure to large-scale properties. Downsides: higher minimum investments. Money is typically locked in. Tip: vet the sponsor carefully. The deal is only as good as the team running it. Option 6. Real estate-related stocks. Another indirect way to invest is through companies that support the real estate industry. Examples include construction companies, property management firms, home improvement retailers. Why this works: benefits from housing trends. Easy to trade. No property ownership required. This is a great complement, not a replacement for traditional real estate exposure. How to choose the right option. Ask yourself 3 questions. 1. How much money can I invest? How liquid do I need my money to be? 3. Do I want income now or growth later? Quick breakdown. Low money liquidity REITs and ETFs. Passive income plus patience, crowdfunding or syndications. Predictable income, debt investing. There's no best option, only what fits your goals. Real estate investing isn't just for landlords. With the right strategy, you can build wealth, earn income, and diversify your portfolio without ever buying a house. If this video helped, hit like and subscribe for more smart investing guides. Thanks for watching, and I'll see you in the next one.